Manufacturing PMIs. The S&P Global US Manufacturing PMIs is compiled by S&P Global from responses to questionnaires sent to purchasing managers in a panel of around 800 manufacturers. The headline figure is the Purchasing Managers Index (PMIs), which is an average weighted is a weighted average of the following five indices: new orders 30%, output 25%, employment 20%, suppliers delivery times 15%, and stock of purchases 10%. For the PMI is calculated, the supplier delivery times index is inverted so that it moves in comparable direction to the other indices. The Purchasing Manager Index is an index of the prevailing direction of economic trends in the manufacturing and service sectors. It consists of diffusion in index and summary of whether the market conditions are viewed by purchasing managers are expanding, staying the same, or contracting. The index varies between 0 and 100, with a reading above 50 indicating an overall increase compared to previous months, and below 50 an overall decrease. Reflects on clients. This is good to know as an investor, dealer, broker, as it may dictate which direction the economy orders are progressing, and asserting deliberation in individual stock equity is going bullish or bearish. Manufacturing PMIs. Manufacturing is the most important sector and accounts for about 78% of total production. The biggest segment within manufacturing are chemicals, 12% of total production, food, drink, and tobacco, 11%, machinery, 6%, fabricated metal production, 6%, computer and electronic products, 6%, motor vehicle and parts, 6%, minor and quarrying accounts for 11%, and production of utilities account for the remaining 11%. Manufacturing consists of raw materials or part into finished goods through the use of tools, human labor, machinery, and chemical processing. Simplified, it makes goods or services to be sold to be consumed upon completion. Anything under 50 in manufacturing PMIs is a contraction, and above 50 is an expansion. Contraction, shrinking; expansion, growing. Italy manufacturing industry is contraction and decreasing. France manufacturing industry is contracting and decreasing. Eurozone manufacturing industry is contracting and increasing. Japan manufacturing industry is in contraction and decreasing. U.S. Britain manufacturing is in U.S. UK Britain manufacturing industry is in contraction and increasing. Germany manufacturing industry is in contraction and increasing. U.S. manufacturing industry is in contraction and decreasing. Canada manufacturing industry is in contraction and increasing. Canada manufacturing industry is in contraction and decreasing. Summary. Most nations in this chart is in contracting except one, France, meaning that most countries are experiencing a period of low growth. Some showed positive signs within the contraction but did not cross the expansion mark, which is a positive sign that things may turn around in these countries. Saying in these world's biggest countries by GDP there is a common denominator of lagging growth. Service PMIs. The service PMI was introduced in 1996 by S&P Global economists known as NTC Research at that time to accompany the existing manufacturing PMIs, with service sector accounting for a larger proportion of GDP than manufacturers for most developed economies. The service PMI was born out of a need for analysts and in particular central bank policymakers to better understand changing business conditions in the wider economy. The service PMI has fewer questions than the manufacturing PMI due to some questions such as inventories not being relevant to many service providers. Coverage includes financial services, consumer services, and all other business services. Reflection on client. This is good to know as an investment broker as it may dictate which direction economy orders are progressing and assertion deliberating in if individual stock equity is going bullish or bearish. Services. Service PMI Manager Index PMIs is for a country designed to provide an accurate advanced indication of the final services PMI data. Data is based on surveys of more than 400 senior purchasing executives. The survey covers transport and communications, financial intermediaries, business and personal services, including NIT, hotel, and restaurants. They track variables such as output, new orders, employment, and prices across key sectors. Anything above or everything under 50 is in service PMI is in contraction, and above 50 is in expansion. Contraction, sinking, expansion, growing. Italy's service sector is in expansion and decreasing. France service industry is in expansion and increasing. Eurozone service industry is in expansion and increasing. Japan service industry is in expansion and increasing. UK Britain service industry is in expansion and increasing. Germany service industry is in contraction and increasing. The US survey industry is in contraction and increasing. Canada's service industry is in contraction and decreasing. China's service industry is in expansion and increasing. So majority of major big countries in the world, except some countries in Europe, are stating growth in the service sector, meaning output and orders is going in a positive direction, increasing. Composite PMIs is the weighted average of manufacturing and service sector PMIs for a given geography or economy, produced by the S&P Global. Reflects on clients. This is good to know as an investment data broker, as it may dictate which direction economy orders are progressing and assertion delivering if individual stock equity is going bullish or bearish. Anything under 50 in composite PMIs is in contraction, and above 50 is in expansion. Contraction equals shrinking, and expansion equals growing. Italy composite industry is in contraction and increasing. France composite industry is in contraction and decreasing. Eurozone composite industry is in contraction and increasing. Japan composite industry is in expansion. UK Britain composite industry is in contraction and increasing. Germany composite industry is in contraction and increasing. USA composite industry is in expansion and neutral. Canada composite industry is in contraction and increasing. China composite industry is in expansion and decreasing. Summary. For major countries in the European Union are contracting alongside Canada, and except rather than these countries such as the wealthiest in the world, Japan, China, and United States of America, stating growth. In the composite sector, meaning manufacturing services is going to is going to state a downfall in Europe and arise in the first, second, and third largest economies in the world, robust growth. May single close to an entry point to stocks in Europe, as valuations of stocks have dipped due to soft landing or recession. Housing starts. Leading indicators tend to peak, highest level, and trough, lowest level before the overall economy, determining direction the economy is going to take. Housing starts. In Canada, a housing start is defined as the beginning of construction work on the building where the dwelling unit will be located. This can be described in two ways. Usually, a stage when the concrete has been poured for the whole of the footing around the structure, or a given stage where a basement will not be part of the structure. Reflects on the client. This is good to know as an investment broker, as it may dictate which direction economy orders are progressing and assertion delivering if individual stock equity is going bullish or bearish. Housing starts. The U.S. Census Bureau published estimates of U.S. housing starts on the 12th business day of each month based on the survey of home builders partially funded by the U.S. Department of Housing and Urban Development. The new residential construction act reports also includes housing completion data as well as a count of building permits derived from separate surveys of building permits offices. Japan analyzed a decrease of 1,200 units housing starts month over month, August to September. U.S. housing starts expanded month over month from August to September by about 20,000 units from about 1.3 million, 3 million. Summary: growth of steady in the first and third largest countries in the world. Japan was showing flash results in the housing, and US was showing that the growth in their economy was growing moderately, so which is good. So investment in US, say real estate, as it shows bullish prospects, may be a good sign that REITs and other mortgage stock equities as an individual value may be in an increasing trend for the meantime, as recovery may be growing steam, mutual funds, mortgage REITs. GDP, gross domestic product, is a conventional indicator which flows in tandem with the economy. GDP, gross domestic product, is the total market value of all final goods and services produced in a country over a given period. Economic growth is measured by the increase in GDP from one period to the next. Monthly and quarterly GDP reports are used to keep track of short-term activity within the market, whereas annual reports are used to examine trends, change in production, and fluctuation in the standard of living. The gross domestic product (GDP) is equal to all expenditures for all final goods and services produced within a country in a stipulated period of time. Reflect on client. This is a good to know as investor, dealer, brokers, as it may dictate which direction economy orders are progressing, and a session delivering if individual stock equity is going bullish or bearish. GDP, gross domestic product, is the total monetary value of all finished goods and services produced within a country's border in a specific time period. As broad measure of overall domestic production, it functions as a comprehensive scorecard to given country's economic health. Italy GDP, gross domestic product, year over year is expanding by 0.04%, currently at 2.6% last year reading. France GDP, gross domestic product, year over year expanding by 0.07%, currently at 1.3% last year's reading. Eurozone GDP, gross domestic product, while year over year is expanding by 0.01%, currently to 2.3 last year reading. Japan GDP, gross domestic product, year over year is expanding by 1.6%, current to 1.7% last year's reading. U.S. Caribbean gross domestic product (GDP) year over year expanding by 0.06%, current to 2.6% last year readings. German GDP, gross domestic product, is contracting by negative 0.04%, currently to 1.3% last year's reading. U.S. gross domestic product (GDP) year over year expanding by 2.9%, current to 1.7% last year's reading. Canada GDP, gross domestic product, year over year expanding by 1.12%, currently to 4.7% last year's reading. China's GDP, gross domestic product, year over year expanding by 4.9%, currently to 3.7% last year readings. Italy gross domestic product, quarter over quarter, is expanding by 0.04%, currently to negative 0.4% month over month. France GDP, gross domestic product, quarter over quarter, expanding by 0.7%, current to 1.3% month over month. Eurozone GDP, gross domestic product, quarter over quarter, expanding by negative 0.1%, currently to 0.2% over month over month. Japan GDP, gross domestic product, expanding by negative 0.5%, current to 1.1% month over month. UK, Britain, gross GDP, gross domestic product, quarter over quarter, is expanding by 0%. current to 0.2% month over month. German GDP, gross domestic product, quarter over quarter is contracting by 0.01%, currently to 0.1% month over month. US GDP, gross domestic product, expanding by quarter over quarter, expanding by 4.9%, current to 2.1% month over month. Canada GDP, gross domestic product, is quarter over quarter expanding by 0%, current to 0.6% month over month. China GDP, gross domestic product, is quarter over quarter expanding by 1.3%, current to 0.5% month over month. GDP was rising by 22% nearly every economy in the chart year over year last year. This year, GDP was expanding by positive numbers except for Germany year over year. Secondly, Eurozone, Japan, and Germany are all in contraction quarter over quarter September start of quarter Q3. Rest of economies are in positive GDP quarter over quarter quarter 3. Last quarter quarter 2, Italy was the only country in contraction in the list of countries last quarter. The rest of it were expanding. This relayed the point that majority of these country size of goods services are growing, stating that the progress in stock volume may be continue to increase bullishly upwards. Buying opportunity and holding opportunity for mutual funds, long-term and reinvestment opportunities, and dividend and capital gains. Stock capital appreciation from pullback to a long-term hold of 5 to 10 years with appreciation of about 11% Nasdaq estimated, and with about around a stock exchange with all around stock exchange probably 20% for small cap names, Russell 2000, etc. Economic indicators. Coincidental indicators flow in tandem with the economy. Retail sales. Retail sales are an economic metric that tracks consumer demand for finished goods. Reflects on kind. This is good to know as an investment dealer, broker, as it may dictate which direction economy orders are progressing and assertion delivering if individual stock equity is going bullish or bearish. Retail sales. This figure is a very important data set as it is a key monthly market moving event. Retail sales is reported each month by the U.S. Census Bureau and indicates the direction of the economy as it acts as a key economic barometer as to where inflationary pressures exist. Retail sales are measured by durable and non-durable goods purchased over a defined period of time. Sales that are reported are derived from 13 types of retailers, from food services to retail stores. Italy retail sales year over year is expanding by 1.3% currently to 3% last year's reading. France retail sales year over year is expanding by negative 4.5% current to negative 5.4% last year's reading. Eurozone retail sales year over year is expanding by 2.9% current to negative 2.1% last year's reading. Japan retail sales year over year is expanding by 5.8% current to 7% last year's reading. UK Britain retail sales year over year expanding by negative 2.7% current to 2% last year's reading. Germany's retail sales year over year is contracted by negative 4.3% current to negative 2.3% last year's reading. U.S. retail sales year over year is expanding by 2.5% current to 1.5% last year's reading. U.S. retail sales year over year is expanding by 2.5% current to 1.5% last year's reading. Canada retail sales year over year is expanding by 2.7% current to 0.2% last year's reading. China's retail sales year over year is expanding by 7.6% current to 3.1% last year's reading. Italy retail sales quarter over quarter is expanding by negative 0.3% current to negative 0.4% month over month. France's retail sales quarter over quarter expanding by 1% current to 1.1% month over month. Eurozone retail sales quarter over quarter expanding by 0.3% current to negative 0.7% month over month. Japan retail sales sales quarter over quarter is expanding by 0.1 negative 0.1% current to 0.2% month over month. UK Britain retail sales quarter over quarter expanding by negative 0.3% current to negative 1.1% month over month. Germany retail sales quarter over quarter expanding by 0.6% current to 1.2% month over month. US retail sales quarter over quarter is expanding by 0.1% negative to current to 0.9% month over month. Canada retail sales is quarter over quarter expanding by 0.6% current to negative 0.1% month over month. China retail sales quarter over quarter expanding by 0.07% current to 0.04% month over month. Summary: every country in the chart is expanding moderately except for China, who is rising robustly. The current year-over-year France, Eurozone, UK, England was showing signs of weakening, but from last year, France and Eurozone were numbers was rising in negative numbers that rest were stating somewhat smaller growing growth than current year-over-year. From last reading, quarter over quarter, difference is that current quarter is expanding in every country in the chart except for Italy, Eurozone, Japan, and USA month to month. Continued slackness in Europe is a bad sign for investors as there may be trouble. Their troubles may seem to be continued. Maybe a pullback opportunity as stock business cycle recovery may signaling a prior support level and probably rebound again. Quarter on quarter from last month, Europe, France, they seem to be performing poorly, with Canada, the only North American country, roaring. Industrial production, coincidental indicators, flow in tandem with economy. Industrial production in the United States measures the output of business integrated in industrial sector of the economy. Reflects on clients. This is good to know as an investment dealer broker, as it may dictate which direct economy orders are progressing and ascertaining delivering if individual stock equity is going bearish or bullish. Industrial production measures the output of business integrated in industrial sector of the economy. Manufacturing is the most important sector and accounts for 78% of total production. The biggest segments within manufacturing are chemicals, 12% of total production, food, drink, and tobacco, 11% machinery, 6%, fabricated metal products, 6%, computer and electronic products, 6%, motor vehicles and parts, 6%, mining and quarrying account for 11%, and of production and utility account for the remaining 11%. Italy industrial production year over year is expanding by negative 2%, current to negative 3.5% last year's reading. France industrial production year over year is expanding by 0.09% negative current to 2.2% last year's reading. Eurozone industry production year over year is expanding by negative 6.9% current to negative 2.4% last year's readings. Japan industrial production year over year is expanding by negative 4.371% current to 4.2025% last year. UK Britain industrial production year over year is expanding by 1.5% current to negative 2% last year reading. German industrial production year over year is contracting by negative 3.6% current to negative 0.1% last year reading. USA industrial production year over year is expanding by 0.68% negative current to 0.4% negative last year's reading. Canadian industrial production year over year is expanding by 0.04% current to 0.6% last year's reading. China industrial production year over year is expanding by 4.6% reading to 4.4% last year's reading. Italy industrial production month over month is expanding by 0% current to 0.3% month over month. France industrial production month over month is expanding by 0.5% negative current to 0.1% negative month over month. In Eurozone, industrial production month over month is expanding by negative 1.1% current to 0.6% month over month. Japan industrial production month over month is expanding by 0.5% current to negative 0.7% month over month. Japan, UK, Britain industrial production month over month is expanding by 0% current to 0.5% negative month over month. German industrial production month over month is contracting by 1.4% negative current to 0.1% negative month over month. U.S. industrial production month over month is expanding by 0.6% negative current to 1.1% month over month. Canada industrial production month over month is expanding by 0.3% current negative to 0.25% negative month over month. China production month over month is expanding by 0.39% current to 0.636% month over month. Summary: every country in the chart is declining except for UK, England, USA, China, and Canada. These means these four countries have positive growth in the industrial sector, which is a good sign to investors of the momentum of the stock equity. The others with negative may signal support level to prior stock low. Example: sell naked, short sell, or a covered short sell to retain the premium if not exercised by expiry date and to hedge losses. In last year's reading, only Italy and USA and Eurozone were posted negative momentum, which is a positive sign. The sector included is experiencing positive bullish stock movement. All the native countries, including Canada and the United States of America, are showing negative bearish momentum. Quarter over quarter, this is as good as in the last 3 quarters that the Eurozone has come negative and signaling lack of upward movement for these countries. For the prior month over month last year, quarter over quarter, there's 3 countries exhibiting slowing with momentum in industrial production. France, which has been a constant laggard in these charts, along with and Japan and Canada are the others. The rest are bullish. Covered calls may be of some interest to investors if they estimate next month turns in the next few months it turns negative. Inflation, lagging indicator, trail economy action in both cases confirming a trend cycle. Inflation is a sustained trend of rising prices of goods and services across the economy over a period. In contrast, deflation is a general decrease in prices of the economy. Inflation is typically a broad measure of the overall increase in prices or the increase in cost of living in a country. Effects on client. This is good to know as an investment dealer broker, as it may dictate which direction economy orders are progressing and actually deliberating if individual stock equity is going bullish or bearish. Inflation. Italian inflation year over year is expanding by 1.69%, current to 11.6% last year's reading. France inflation year over year is expanding by 4%, current to 4.5% last year's reading. Eurozone inflation year over year is expanding by 2.9%, current to 5.5% last year's reading. Japan inflation year over year is expanding by 3.3%, current to 3% last year's reading. US, UK, Britain inflation year over year is expanding by 4.6%, current to 7.9% last year's reading. Germany inflation year over year is contracting by 3.8%, current to 6.4% last year's reading. USA inflation year over year is expanding by 3.2%, current to 3.7% last year's reading. In Canadian inflation is expanding by 3.1%, current to 3.8% last year's reading. China inflation year over year is expanding by 0.2% negative, current to 0% last year's reading. Italian inflation month over month is expanding by 0.2% negative, current to 0.2% month over month. France inflation month over month is expanding by 0.1%, current to negative 0.5% month over month. Eurozone month-over-month is expanding by 1.0.1% current to 0.3% month-over-month. Japan inflation month-over-month is expanding by 0.7% current to negative 0.3% month-over-month. UK Britain inflation month-over-month is expanding by 0% current to 0.5% negative month-over-month. Germany inflation is month-over-month is contracting by 0.0%, or is contracting by 0% current to 0.3% month-over-month. Italian USA inflation month-over-month is expanding by 0% current to 0.4% month-over-month. Canada inflation month-over-month is expanding by 0.1% current to 0.1% negative month-over-month. China inflation month-over-month is expanding by 0.1% current negative to 0.2% month-over-month. Summary. The majority of countries in the chart are dealing with deflation, with USA, UK, England on the cusp of 0% momentum. The countries consist of European countries and Japan. Year over year, last year, only Italy, Eurozone, and USA were reporting deflation. UK 0.5% and Canada reporting 0.56% deflation over last year's year-over-year reading. Products and services are getting cheaper. Purchasing power increasing. Deflation is a decline in the rate of which prices rise. A decrease in the rate of inflation. Prices are still rising, but at a slower pace, which is bad nonetheless for investors, as it suggests that prices of goods and services are still increasing month over month. USA, Italy, France, Eurozone are supporting a deflation which relate the purchase power, spending less, more, gain more, is increasing, and more products are being consumed in this economy. But buy more stocks, but be moderate and follow the trend and metric, as it will curtail you to continue buying, or economy will stall and need to reduce buying and save for a rainy day. Multiple figures from last month are supporting deflationary pressures in these economies: Japan, UK, England, France, Canada, etc. Economic indicators. Lagging indicators show economic action in both cases, confirming a trend cycle. Labor cost. The measure of cost of labor inputs required to produce 1 unit output of and equals labor compensation in current dollars divided by the real output. It is often calculated as a ratio of labor compensation per hours worked and labor productivity. Reflects on client. This is good to know as an investment dealer, broker, as it may dictate which direction economy orders are progressing, and assertion delivering if individual stock equity is going bullish or bearish. Italian labor cost is expanding by 111.60 from 109.80 month over month, reading November, etc. France labor cost is expanding by 117.90 from 117.40 month over month, reading November, etc. Eurozone labor cost is expanding by 113.80 from 102.60 month over month, reading November, etc. UK Britain labor cost is expanding by 117.90 from 115.80 month over month, reading November, etc. German labor cost is expanding by 124.49 from 122.35 month over month, reading November, etc. US labor cost is contracting from 119.69 to 119.69 from 119.93 month over month, reading November, etc. Canada labor cost is expanding by 113.81 from 131.08 month over month, reading November, etc. Cost reading November, etc. Canada labor cost is contracting to 68.4 from 71.5 month over month, reading November, etc. In summary, in every country in this chart, labor cost is increasing except for USA and China. So employees is receiving more per hours worked. Wages seem to be increasing. This is a good sign. Persons working and persons working already. Since deflation is also happening in major economies of the world, employees have more purchasing power and supply is more cheaper, more than people to spend more. Consumer sentiment expectations focus on three areas: the consumer view prospects for their own financial situation, how they view prospects for general economy overall over the near term, and the view of prospects of the economy over the long term, which is good for sellers of products. Economic indicators. Lagging indicators trail the economic action in both cases, confirming a trend cycle. The unemployment rate measures the number of people actively looking for a job as a percentage of the labor force. Reflects on clients. This is good to know as an investment dealer broker, as it may dictate which direction economy orders are progressing and ascertain delivering if individual stock equity is going bullish or bearish. Unemployment rate number Unemployment rate, numbers of unemployed persons expressed as a percentage of the labor force. The unemployment rate for a particular group, for example, age, sex, marital status, is the number of unemployed in that group expressed as a percentage of the labor force for that group. Italian unemployment quarter-over-quarter is expanding by 7.4% from 7.3% month-over-month. France unemployment quarter-over-quarter is expanding from 7.4% from 7.2% month-over-month. Eurozone unemployment quarter-over-quarter is expanding from 6.5% from 6.4% month-over-month. Japan unemployment quarter-over-quarter is contracting from 2.6% from 2.7% month-over-month. UK unemployment quarter-over-quarter is neutral at 4.2%. Germany unemployment quarter-over-quarter is expanding by 5.8% from 5.7% month-over-month. US unemployment is quarter-over-quarter expanding by 3.9% from 3.8% month-over-month. Canada unemployment quarter-over-quarter is expanding by 5.7% from 5.5% month-over-month. And China unemployment quarter-over-quarter is neutral at 5%. Summary: USA, UK, Britain, and Japan all have figures in low unemployment in the last 2 months. Shows that these countries have a very employee working in a robust economy. Through these countries, the economy is booming, and they got most of the persons working and assist wealth. The boom has already lagged in the peak that was happened in prior months. Contraction will be in the future when prices equals demand. But for now, in these countries, bullishness will remain for a while. The rest of the countries have high unemployment and is indicating that trough and recovery may come next. Good opportunity to buy low and sell high, as stocks will have trough and a big expansion instituted by governments to spur economy and introducing new wealth and need for employees. Balance of payment, international finance and trade. Reflects on client. This is good to know as an investment dealer broker, as it may dictate which direction economies are progressing and ascertain delivering if individual stock equity is going bullish or bearish. Balance of payment. The balance of payment is a detailed statement of the country's economic transaction with the rest of the world over a given period, typically a quarter or a year. The balance of payment has two major components: the current account and the capital and financial account. Italy balance of payment year-over-year is contracting by negative 2,904 million from 35 euro million last year's reading. France balance of payment year-over-year is expanding by to negative 2,935 million from negative 8,413 euro billion last year's reading. Eurozone balance of payment year-over-year is expanding by 28 billion 898 million from 22 billion 52 euro millions last year's reading. Germany balance of payment year-over-year is expanding by 29 billion 624 million from 5 billion 869 euro million last year. US balance of payment year-over-year expanding by 280 billion from 255 billion USD million last year's reading. Summary: the countries on this chart are saying that Italy and France is showing contraction, meaning it's showing a deficit in these countries that year. The exact opposite for Eurozone, Germany, and US are showing surpluses in their countries during this year. France seems to be a laggard in all of these charts, as I'm commenting on. Think of the current account as what we spend on things, and a capital, a finance account, as what we do to finance spending. During this given year, Canada buys more goods and services from abroad than it sells. If it would run a current account deficit for the year. If it needs to sell more assets to finance its spending, which means running a capital and financial account surplus. Alternatively, if we go into debt, the countries on this chart are saying that Italy and France are showing contraction. Current account, international finance and trade, reflects reflects on the clients. That is, it's good to know as an investment dealer, as it may dictate which direction economic orders are progressing, and expectation delivering if individual stock or equity is going bullish or bearish. Current account. The account records the import of export of goods and services between Canadians and foreigners as a net transfer to such as foreign aid. This current account is sometimes called as a trade account in the financial press. Account is encumbered in the balance of payments alongside capital and financial accounts, including economic transfer between the rest of the world and import and export between home countries. Italy current account month-to-month is 2,189,200,000 from 2,437,050,500,000 euros month over month. France current account month over month is negative 3,260,000,000 euros month over month. Eurozone a current account is 5 month over month is 40,000,000,78 from 33,000,000,74 euros month over month. Japan current account month over month is 2,723,000,000,000 month over month from 2,141,000,000,96 million Japanese yen month over month. UK current account is month over month is 25,289,000,000 from 15,155,000,000 Great Britain pounds month over month. Germany current account month over month is 28,132,000,000 euros month over euros current month. U.S. currency account month to month is 212 billion USD negative. Current account Canadian current account month to month is negative 2,627,000,000 CAD current month. Current account month to month. China's current account month to month is 626 from 647 hundreds of million month over month. Summary. Most countries are showing continued improvement in current account, suggesting that country is to show growth. The exception was with France, USA, and Canada. France is a constant lagger, the economy is not doing well, avoid. But rest of the native countries, US and Canada, will rebound in next year, if not by year after 2024 to 2025. Another metric showing positive sign for those countries.